Hello, hello. This is Carlos Samaniego with Tax Debt Live, coming to you from Mountain Home Village. I'm excited to actually be here. It has been quite some time. I launched this Tax Debt Live just over 4 weeks ago, and unfortunately, I ended up getting extremely ill at that when I started this. I literally got extremely ill, lost my voice, and was unable to talk for almost 3 weeks. So super excited to be here. Today's episode is literally titled. If you saw that, I titled today's episode "The IRS Hasn't Called. You're Not Safe." And the reason we're doing this is that I've had a few questions come in through the week. I'm going to actually keep an eye on here on any comments that actually come through. So if you have a questions, feel free to go in there and ask a question. But hope you're doing well. I'm up here at my home office in Mountain Home Village, and it is pouring down rain. We haven't had rain in a long time, so it's I'm actually wearing a little sweatshirt here to stay nice and cool or nice and warm, and looking forward to answer some of these questions. And the first question, and I think we're going to have my son Andrew is going to join us. Andrew, if you're actually watching, I did see you on YouTube there. I did send you a link through YouTube, through our messenger system for you to join us live. But wanted to talk about first question that came in, and this was from a client. She had actually talked to us last week, and specifically, she had asked. The reason she called is not because the IRS had contacted her, and this is kind of interesting. And we get, I would say, about 30% of our people that actually reach out to us. They'll reach out to us, and the IRS or the state hasn't actually reached out to them, but they know for a fact that they might have tax problems. And this specific person, she said the IRS hasn't contacted her in years, and she just did not know what was going on. She wanted to know, am I clear? And that's why she had actually reached out to me, is just because, when you don't file taxes, kind of like in my situation when I didn't file for 8 years, you're doing something wrong. It's not a you're not filing your taxes. You're wondering, or you did file your taxes, and you have money that you owe, but the IRS hasn't reached out to you. And in her situation, I had asked, have you gotten any letters from the IRS or the state of California? And she said, well, Carlos, no, I haven't. But at the same time, the last time I'd actually ever filed a return, I was actually using my mom's address. And my mom told me she never got a letter. And for years, she assumed that the silence was, just the silence of the IRS meant that she was safe. But she started to realize over time she was working, never filed a tax return, and she just thought she kind of slipped through the cracks. And like I tell anybody that hasn't filed in years, especially if you're working, you don't slip through the cracks. The IRS actually gets documentation, the W-2s or 1099s for either self-employment or maybe interest that you've earned, and they're keeping a log. And many times what ends up happening when you don't file those returns, either the IRS or the FTB, they will do what's called a substitute for return. Basically, they file your taxes on your behalf, which creates an assessment which they can actually collect on their taxes. And Andrew, I see you just got into our studio there, so I'm going to bring you on here in just a second, Andrew. So what happens is that when they file those tax returns, or when she's working or filing, not filing, the government is kind of keeping a log. And if they file those substitute for returns, what ends up happening is that they can actually start collecting on that debt. And the problem is, if you don't have an updated address with the IRS or FTB, a lot of times it can go through the entire collection process, and all of a sudden you got a bank levy. So and that's what she said. I don't want to be surprised um, uh, going to my bank and not having any money in my bank. Or the other thing is, if you get a new job, all of a sudden you get this new job. It's a great job, and all of a sudden you get a wage garnishment. So that's one of the dangers of doing that. And with that, I'm going to actually bring on Andrew Samaniego here. Andrew, nice to join you.
Good evening.
Tax That Live on a Sunday evening, Andrew.
No, we just got back from Old Town in San Diego. Went to Cafe Coyote.
Oh, did you? Spot. Oh, it's one of our favorite spots. Is it raining down there?
It's not raining down here. It's actually just partly cloudy, but no rain. It's been actually a very beautiful day today.
Oh, nice. No, we've had rain all day. Actually, we actually have a fire going right now. It's actually cold enough to have a fire. So, Andrew, thanks for joining us. I know I caught you. I told Andrew at the very last minute, "Hey, join us here." So, Andrew, question number one, and I think you could hear what I was talking about, was that substitute the non-file the people that call your office and basically say, "Hey, I know I haven't filed, but I haven't gotten any letters before."
Right.
Have you gotten anybody like that recently? I know I just had a big one this last week.
Yeah, we do get a lot of those, and a lot of the times they either say, one, I haven't got a letter, or two, the exact opposite is like, hey, I haven't filed taxes, but they're saying I owe like 100K plus.
Yeah.
And usually what happens is like, okay, the IRS, they get your W-2 statements, they get their 1099 statements, they'll get all of that, and then all of a sudden, they're surprised when they're hit with a bill all of a sudden.
That's what I was just explaining to the audience, Andrew, is that a lot of times when you don't file, like Andrew just said, you get the government's still getting the W-2s, those 1099s. So they actually will file a tax return on your behalf. But here's the very interesting thing you have to remember, guys, is that the state of California is slightly different than the IRS and a lot more aggressive. And let me explain why. And I was explaining this to Andrew. And for those of you guys that don't know, Andrew is an enrolled agent. He's actually my son. He's an enrolled agent, has a practice down in San Diego, works with me and our clients here at Tax Debt Consultants, and is actually expanding his business to Monterey, California here in a couple months. But he specializes in tax resolution. So that's Andrew. So if I say my son, that's what I'm talking about, Andrew. And sometimes I'll call him Andrew, and it kind of feels weird calling him Andrew because or if he's talking to me, he's like, if sometimes, Dad, it feels weird calling you Carlos because you're my dad. But you'll understand the relationship here. But what I wanted to bring up is just that where state of California, you got to be really careful, is that state of California will do an assessment on you without having W-2s or 1099s. And let me explain what California will do. Like the IRS will only do it if they got third-party documentation, W-2, 1099s, or other documentation that you actually earned an income. That's when the IRS will actually file that substitute for return. California, what they will do is that if you've been filing returns and just stop all of a sudden, what they will actually do is just file a return on your behalf based on your occupation. Mm-hmm. It's called an occupational assessment. So if you're, as an example, let's just say you were a real estate agent and you had a real estate license or any type of California license and you didn't file a tax return, they will actually just they'll take a look at your zip code, what the estimated income for that profession was, and create an assessment. So they didn't get anything saying that you actually made money. They're just basing it on your occupation.
And I've seen it with doctors, therapists, barbers.
Because they all need what? A California license. So they know you got the license. So the other thing I've seen, Andrew, and I think I told you about this one, was if you're using a mailing address in California and you don't live in California, that's the worst thing you could possibly do. The reason is that if you got a mailing address, they're actually wondering, well, if you got a mailing address here, why aren't you filing a tax return in California? Mm-hmm. I actually had an individual that lived in Hong Kong had a mailing address, a mail going to the residents in Northern California, and he ended up getting a wage garnishment at his job in Hong Kong based on that the California thinking that he should have been filing taxes. So that's another thing that they do. And the third thing that they do is if you're getting mortgage interest, in other words, you own a property, maybe you have a rental property, and you've seen this one, Andrew, right? They have a rental property, and California sees that mortgage interest coming for that California rental property. They will just see, oh, okay, he's paying mortgage interest, $20,000 a year of mortgage interest, didn't file a return. So they're going to calculate how much income do you have to be making to be paying $20,000 of mortgage interest. Right. And both me and Andrew, we've actually had to resolve these things of going back to California and say, no, he didn't live here, or in that mortgage interest situation, it was a rental property, and they weren't reporting it on a California return. It needs to be reported. So
there's definitely a lot of issues when it comes to California, especially like they are the number one people who will go after you if you were, let's just say you lived in California for a little bit, or you were, let's just say, I work with a lot of military clients, and they get stationed here. And so they end up buying a property. They end up, trying to renting it out, and they'll file, a non-resident return. And then all of a sudden they'll get billed, a couple of years later saying that there are residents there. But, military rules are saying, hey, if you, enter the military in Maryland and you happen to be stationed in California, you're considered a Maryland resident. And there's a bunch of new rules that come out with these kind of situations. But California, like regardless of if you're just, visiting, if you have business income in California, like they are going to come after you, and they come after you hard.
Exactly. And that actually, is going to take me to question number 2, Andrew. And question number 2 that came in this last week is, CaliClaw took money directly from my bank account. And yes, they actually did email me and said CaliClaw took money. And for those of you guys don't know, CaliClaw is my nickname for the state of California Franchise Tax Board. That is who CaliClaw. I gave him a name. I actually turned him into a character. Andrew, do you have a copy of that book? My book? My CaliClaw book?
Oh wait, nope, I don't have that one. That's the only book I'm missing.
You know what? I actually have it in the other room. Actually, you know what? I can actually pop it up on the screen here.
Yeah. So I have your other 2 books. So we have the How to Make the IRS an Offer You Can't Refuse. That one was your first book, and it's definitely a bestseller. And then the next one you had is the Never Give Up with Dick Vitale.
Oh yeah,
very good book.
Thank you.
You can always get those on Amazon, or you can look at one of my dad's links, and he has it for free. You can get a PDF version of it.
And I do actually have I'll bring it up on screen here. Let's learning how to do all these different things here.
Yeah. And then, so your third of I guess you have a lot of different books, but this is probably the third biggest book release, the Shutdown CaliClaw. There it is.
Yeah, there it is. So if you guys don't have this book, if you go to CaliClaw.com, that is my book on the state of California, and that is CaliClaw. That's how I actually look at that. They're just, I say it all the time, 100 times worse than IRS in terms of dealing with taxes. You can get this book for free. Just go CaliClaw.com, pick up the book. So let's just go back to the question I actually had regarding that. The question was, I owe back. Let's go back. It was CaliClaw took money directly out of my bank account. Can I get it back? Andrew, can they get it back?
They can, but they don't have a lot of time.
Bingo. And this actually came from somebody. The good news was they did take money out of the bank account, but it was only $8. That's the good news. So that was really good news there. So with them, I told them, I said, well, the good news, they only got $8. The bad news is, they're on to you. So they're going to keep going after that bank account, possibly look at other bank accounts, and also possibly do wage garnishments. So we know the state of California is after you right now. Yeah. So specifically, as Andrew said, that you don't have a lot of time. Andrew, why don't you tell them basically from the date that they actually get that money is put on hold. And that's an important thing to remember. when you go to your bank account and it's zeroed out, the state of California has not taken any money yet. The money has
Right.
not left your bank account.
It's kind of the same way with the IRS and California. They
exactly.
put it like on hold in a separate account, and that money is going to be there until they basically fulfill the levy. And it usually takes around, I think, California about 10 days.
It's 10 days. It's 10 business days. So basically, when that happens to you, and I've told Andrew this when we were discussing CaliClaw, is that when the IRS or the state of California do a bank levy, basically go after that bank account, it's their way of saying, okay, you haven't dealt with this. We haven't resolved this. There's no resolution. So we're going to give you one final chance. And this is literally your final chance. And with California, because we're talking about California, you got 10 business days from the date that they put a hold on that money.
All right.
So the good news, the money is still there. But bad news is you got 10 days, 10 business days to deal with it. And I tell people, and I tell my tax people that I train, it's not really 10 days for you, because here's the thing. Even if you can get this bank levy release, and we do it, I would say 90% of the time are able to get that money back from you.
Yeah.
The problem is that the state of California will do the release and send it to your bank. Problem is the bank might need 24 to 48 hours to fulfill that request. So if you do it on day 9, the chances are, and this has happened to me before, chances are client waited way too late. We were able to get the bank release. It got to day 9. And then by the time the bank gets it and tries to process that paperwork, that's one part of the bank that does that. And the other part of the bank that has to release it on day 10 has already released it.
Right.
And now it doesn't mean the money's gone. The money's gone out of your bank account. It got literally, and I don't know if I ever told you this, Andrew, when the bank releases that back to when the bank releases the money to California, it doesn't even go directly to California. It goes to a third-party processing center. So the money goes there, and then once the third-party processing center gets it, they actually turn around and send it to the state of California. So it may not even hit the state of California's computer system for another 30 to 60 days. So and it's possible to get the money back, but it might be months before you get that money back if you didn't owe the money or you didn't owe all that money. So that's why this 10-day time frame is so dang important, to deal with it as fast as possible. Andrew, you had one recently, didn't you?
Not for California, IRS.
Was it IRS?
Yeah. So actually, there is one client. So it was a couple here in San Diego. They are a small business. The wife does the bookkeeping for the business, and yes, they immediately got levied. The client about $200. So not too much, but obviously we got that money back. But the main thing about California, as I always tell my people on my list, is if you owe California, they're going to get their money one way or the other. It's either going to be an installment agreement or it's going to be, currently not collectible status, but they will not, they're not like the IRS where they can, they'll settle. They will get their money even if it's in death. So what that means for you is, hey, you need to get into a payment plan, or you need to come up to some sort of resolution with California as soon as possible. And one, if you do, you can use that as leverage with the IRS. It's one a great strategy that we use in both of our firms.
Oh yeah, absolutely. Is that, and basically what he's saying is that, like, if you got to pay the state of California $500 a month, in most instances, the IRS will use that as an expense towards what you're able to pay them. And since California is not going to get rid of your tax debt, and that's another question. I didn't bring it up today. That a lot of people say, well, will the state of California Franchise Tax Board do an offer and compromise? They do have the program. I have never seen it get approved with the tax board's income taxes. I have seen offers and compromises, and I've done them with the California Sales Tax Division, but not with the Franchise Tax Board with income tax. They're very, very, very rare. I call them, it's like that pink unicorn that you don't know about. So, but that was the state of California. The other question I had here, And this is big because I was just talking to a real estate guy that he noticed that a lot more people are starting to make offers on houses here in California.
Hmm.
And the question three is actually very interesting. If I owe back taxes, but I'm trying to but I'm trying to buy a house, is that over? So basically, is it impossible to buy a house if you owe back taxes? And this person had, you'll find this interesting, 16 years of unfiled tax returns,
Oh wow.
but just had recently gotten married. They want to buy a house. And I told him the good news is, here's the good news. The IRS only wants 6 years of those tax returns to be considered fully compliant.
Right.
And in most cases, a mortgage lender to get a house only wants 2 years of taxes. So in this person's situation, I said, hey, get 25, 24 done. Because, and again, this is a strategy for him to buy a house as soon as possible. I said, get 25 and 24 done. Hopefully you don't owe any taxes for those. If you don't, most lenders, that's what they need, the last 2 years of tax returns. And it's possible to get to buy the house. But here's where the problem can be. You can have the big problem. If you're trying to buy a house, and let's just say you file 25 and 24, and you have a $10,000 $20,000, name the amount due. Let's just say it's $20,000 tax bill. Here's the problem. Your lender is going to want you to be in an installment agreement for at least 3 months in most instances, for them to be able to approve you for a mortgage loan. And then again, mortgage lenders have certain debt to income ratios they have to follow. But here's the problem, is that the IRS is not going to give you an installment agreement for that $20,000 for those 2 years if you have those other years missing. So basically, to get into the installment agreement, you're going to have to get at least 6 years of returns to be considered fully compliant. And then hopefully you don't owe more money in those other years, which makes your tax balance so high. And then now you're going to have an extremely large balance. So the answer to that question is, can I buy a house if I owe back taxes? The technical answer is yes. Or actually, here's a better answer, right, Andrew? Yeah. It depends.
It depends. It's always it depends.
It depends. What I would seriously do is just talk to somebody like ourselves, like Andrew and myself, that understand how back taxes work, tax resolution works, to be able to make sure you do this thing correctly.
Yeah, the point is, every tax problem isn't a one size fit all. Every situation is always different, and that's why it's really important to talk to a professional. Like, for example, like you always hear on whatever, news article, blog article, video, file the last 6 years. But there's some cases where you have to file back even farther back. And like, let's just say for that substitute for return example is, if you have that substitute for return and your tax situation might be better if you file that old return, then file that old return. But again, and also if you haven't filed, let's just say 10 years of tax returns, and the IRS just determines, hey, I just want to look at this tax year that you didn't file. They have the complete right to do that. And I've seen it happen multiple times where they'll file that one of those really old years, and then they'll charge you for that year. And you either got to fix that year or you got to pay that year. It's a double-edged sword. So not every situation is the same.
And that's really good, Andrew. And I'm glad you brought that up, is that, if you've gone multiple years of unfiled returns, you need to find out, you got to get a tax debt triage. And that's what me and Andrew call it. You got to do a triage. You know what? Your doctor, I always say this, if you have an extreme pain in your lower back, right? And the pain doesn't go away, and you're like, okay, what the heck is going on? If you call your doctor and the doctor says, you know what, Andrew, you need to show up for surgery next week so we can get, cut your lower back open to see what's going on. Right. You would actually run, right? A doctor doesn't just cut into you. What does a real doctor do? They're going to say, we need to triage this. We need to find out what's really going on. We need to get blood labs, x-rays, MRIs, and see what's causing that lower back pain. because that lower back pain could be
nerve damage.
It could be anything.
Disc, muscles.
It could be a muscle tear. It could be kidney disease. It could be gallstones. It could be 1,000 different things, right? It could be cancer. The problem is you don't know, right? And the doctor doesn't know. That's why they order all these tests. Same thing with tax problems, especially for those people that haven't filed in years. Most of them have no idea. You know, when me and Andrew are doing our consults, so we're like, well, when's the last time you filed? I don't know. I think it was 2003. How much money do you owe? Well, I don't know. I get all these notices. One notice says one balance, the other notice says another balance. So what we actually do when you got this tax problem is we order your blood labs and x-rays for your tax problems. That's our triage. We want to know exactly what's going on before we make a decision on what returns need to be filed. Is there a tax debt that's going to expire, right, Andrew? Because tax debt does expire. You know, should we be waiting to do something to let a tax debt expire? So you got to get that triage done to really know what's that next step.
Yeah. And I hear all the time as well is like, oh, I can pull my transcripts from the IRS. I'm like, well, yes, you absolutely can. You can absolutely go to the IRS and request your transcripts. The one thing you do when you get those transcripts, if you order them themselves, it's going to be a piece of paper with a bunch of numbers, dates, and it's not going to make any sense whatsoever. Yeah. And one thing that's great about the tax softwares that we have as resolution professionals is one, it'll be easily a readable report that you can actually get. You'll be able to see specifically what dates go to which debts, which dates are going to expire for which certain tax debts. You're going to get a full-on report. And I think when people try to do it themselves, you'll see they'll spend all this time trying to figure it out themselves, but then all of a sudden their interest, their penalties, and everything is going up. And so all these things are just wasting time. It's wasting more money, and it's going to be a lot cheaper if you would have just gotten help in the first place. So
100%. We're going to wrap it up with those 3 questions. Those are 3 great questions. We're at 30 minutes here. And again, if you have not if you haven't picked up my my book, Tax Debt, the CaliClaw book, just head on over to CaliClaw.com and you can pick up this book here. So if you're in the state of California, you got state IRS. Oh, actually, I got the wrong. There you go. So the ticker there, it's CaliClaw.com. Let me just make sure you spell that correctly here. Andrew, I'm actually hard to believe that I haven't coughed as much as I expected there. So there's where you can pick up the book. It's you can pick it up on Amazon. If you want the actual book, it's like I think $15 on Amazon, or you can get the free PDF version at CaliClaw.com. And my other newest book that actually just came out, it's called Escape the IRS. There, it's Stop Hiding from the IRS. This book was a great time writing, putting together. But if you haven't gotten that book, again, you can pick it up on Amazon, or you can get the free PDF version at escapetheirs.com. So, Andrew, I really appreciate you joining me, taking a little bit of time away from the family. I'm actually thinking, guys, what I'm actually thinking about doing is moving this to Friday afternoon around noon. It's just at the end of the week, a lot of people get Fridays off. You can watch it at during lunchtime, and it just makes it easier. And I like my setup much better in my office than at home.
That's right.
And with that, again, Andrew, thank you for taking the time to join us. This is Carlos Samaniego with Tax Debt Consultants and Andrew Samaniego, EA. Looking forward to helping you guys. You guys need any help whatsoever, feel free to reach out at our office at 909-570-1103. Feel free to reach out to us. And if you need to book an appointment, you can always go to calltaxea.com. With that, Andrew and Carlos checking out. Talk to you guys later. Bye-bye for now.